Okay, thanks for the introduction and good afternoon, everyone. Glad to join today's webinar and thanks to TBS and Nanhua for the invitation. My topic today will be China's futures market development and products introduction. So my presentation will cover three parts. First is an overview of China's futures markets in 2022. Second is the opening up progress of SHFE and INE, which includes the latest development of INE products and the new QFII scheme. And lastly, next step at the exchange level. So the year 2022 was a hot year for the global commodities market. The complex and unpredictable geopolitical issues, the nickel short squeeze, the lingering pandemic, all these factors add up to the huge pressure on various markets worldwide. Still, when we look at the global commodity market, the trading volume is dominated by Asia Pacific, especially China. According to FII, the trading volume of Asia Pacific in 2022 accounts for 60% of the world's total commodity futures and option trading volume. So for the first time in recent years, China's futures market experienced a year-on-year decline, both in trading volume and turnover. This is also true for many of the other markets globally. In contrast, international products in China's futures market, especially on INE, recorded very good growth momentum. In 2022, the cumulative trading volume and turnover of INE increased by 59.7% and 86.5%, making INE the only commodity exchange in China that recorded double-digit growth. Metal contracts remain a strength of Chinese commodity exchanges. 12 out of the top 15 global metal contracts by volume are traded on Chinese commodity exchanges, among which 8 are from Shanghai Futures Exchange, such as steel rebar, hot rolled coil, aluminum, zinc, nickel, etc. Energy contracts traded on Chinese exchanges also show very good growth in 2022. Shanghai Futures Exchange's fuel oil futures kept ranking number 2 by volume globally. INE's SC moved up to number 9 with its volume increased by 25.6% year-on-year. INE's low sulfur fuel oil moved up to number 16 with its volume increased by 120% year-on-year. In addition to metals and energy contracts, agricultural contracts are another strength of the Chinese markets. All the top 10 agricultural contracts ranked by volume are from China. SHFE's wood pulp and natural rubber futures contracts ranked number 9 and 10 respectively. So currently, we have 103 products listed on China's futures market, including 72 futures and 31 options. Among that, 23 are specified domestic products accessible to overseas investors, which we also call international products. These products are underlined and with asterisk. Among the 103 products, 45 are QFII accessible products, including 26 futures and 19 options. These QFII products are newly announced last year. So now we have different channels to access China's futures market. A foreign investor can either set up a wholly foreign-owned entity in China so that it becomes a domestic client and can trade 102 products, or the investor can trade the 23 specified domestic products without registering any entity in China. And they can open an account with a Chinese futures firm or an overseas intermediary or overseas special brokerage participant. If the entity is a qualified foreign institutional investor or RMB qualified foreign institutional investor, it can trade the 45 products via QFII or QFII channel. Now, Hua will illustrate these channels more later. Next, let's look at the opening up progress of SHFE and INE in recent years. We know that China's futures market started to open to overseas investors for the first time since 2018. So almost 5 years passed. How is the internationalization of the market doing? First of all, we see the international products on INE enjoy good liquidity and the market is growing very fast. Over 220,000 lots of crude oil and over 20,000 lots of bonded copper are traded every day. A large share of the average daily trading volume and average daily open interest is contributed by overseas investors, and overseas participation is still increasing. Currently, the INE market has overseas investors from over 20 countries and regions in 6 continents. As mentioned previously, despite the pandemic and geopolitical issues, the INE markets grew significantly. As we can see from the chart below, the average daily trading volume of all INE products in 2022 showed a year-on-year increase, which is a highlight both for the exchange and for the futures market. Of course, in terms of absolute number, INE market is still small, but that also means big potential in the future. In addition to our global network of overseas brokers is expanding. Currently, 3 overseas special brokerage participants and 79 overseas intermediaries have been registered with INE, covering 11 countries and regions in Asia and Europe. Singapore is the second largest destination of INE registered OSBP and OIs. Overseas investors can entrust these brokers such as DBS or entrust China's domestic futures companies like Nanhua to trade INE products. So this slide lays out the account opening routes of different access channels. Left-hand side is the domestic client account opening way. So for WFI, wholly foreign-owned entity is a domestic client, and QFII are treated as domestic clients. They can open account through a domestic futures firm member. Right-hand side of the diagram illustrates how client can open account for specified domestic products. So the client can open account with a domestic futures firm member like Nanhua, or the second way is to open account and trade through an overseas intermediary like DBS, or open account via an overseas special brokerage participant directly. This table shows a brief comparison of the participation paths under the QFII channel and the specified domestic product channel. In terms of participation, participants under the QFII channel are overseas entities with QFII and RQFII qualifications, while overseas participation under the specified domestic product channel are broader in scope. So they can be overseas individuals, general corporate clients, and special corporate clients. In terms of qualification, QFII channel requires investors to have QFII or RQFII qualification, but specified domestic channel does not require such things. In terms of account opening institution, QFII clients can open account only with futures firm members, whereas domestic specified domestic products channel, they allow account opening with futures firm members, overseas intermediaries, and overseas special brokerage participants. In terms of margin currency, QFII can only use RMB, whereas the specified domestic products they allow US dollar to be used as margin. In terms of investment products, SHFE and INE, we have 16 products for QFII and 5 products for specified products. Finally, in terms of the physical delivery, QFIIs are not allowed to participate in physical delivery right now, whereas for the domestic specified products, most of the institutional investors can participate in physical delivery. Here we have listed all the most of the basic information of SHFE products accessible to QFIIs, including the listing exchange, contract size, trading hour, as well as the liquidity and position open interest information. So overall, these are generally liquid products and of world market interest. For more details, please feel free to visit our official website of the exchange to learn more about these contracts. So who will treat these products? They can be the hedgers with business related to China commodity market. They can be hedge fund or arbitrageurs who trade between different markets. They can also be market makers, liquidity providers, high frequency traders, etc. Investors with asset allocation needs in commodity market or China market may also participate in these contract trading. Usually, crude oil and copper are most popular products among overseas investors. So today, please allow me to say a few words about these two products. Briefly speaking, INE crude oil contract is a pretty liquid crude oil futures contract, with the underlying being medium and sour crude oil stored along the coastal area of China, distinguishing it from Brent or WTI, which better reflects the supply and demand relationship in the Far East market. Asia is the world's largest producing and consuming region for refined copper, and China accounts for 41% of global production and 51% of global consumption. So for copper, we have adopted a dual contract model. As SHFE's CU contract is based on tax-included market, reflecting the domestic market supply and demand, whereas INE's BC contract is based on bonded market outside the customs border, reflecting the international market supply and demand. The dual contract model can better serve the price risk management needs of both domestic and international copper industries. We see quite a few investors do arbitrage trades between CU and BC and between BC and overseas copper futures such as LME copper or COMEX copper. Moving forward, we will continue to promote the listing of new products such as freight index futures, LNG futures and options, and low sulfur fuel oil monthly average price futures, and continue to study the possibility of listing refined oil products and so on. In addition, we will have more diversified forms of overseas marketing activities in more regions, publish more in English investor education materials, and continue to provide support to our members and various participants in our market. We believe that China's market will have a promising future. And finally, if you have any questions, please feel free to contact us, and here is our contact information. And in the bottom right corner of this page, there is a QR code for the INE mailing list. Subscribers can receive INE's monthly report and reminders of investor education events. So much for my sharing, and thank you very much.